Evening, guys. Evening. Uh, it's been a while since we hosted one of these sessions. It's been a while since we hosted, so if you guys can kindly confirm for me if you can hear me. If you guys can kindly confirm for me if you can hear me, and if you can see my screen, it should be the 1 minute chart on the Nasdaq. Should be the 1 minute chart on the Nasdaq. So just let me know if you guys can see my screen, if you guys can hear me as well. Okay, just give me a second. Yeah. Uh, yeah. Again, guys, good evening. If you guys can confirm for me, if you guys can confirm for me if you can see my screen and you can hear me, either on the live chat or the private community. Okay, going straight into it. Okay, cool. The first thing, obviously, guys, what you guys should be looking at, the first thing that you should be looking at every every week, the economic calendar is the first thing that you guys need to look for. Not for, but you need to look at the economic calendar. Obviously, I use Forex Factory, forexfactory.com right now. So yesterday, 10 March. Yesterday we didn't have anything happening. Okay. We did not have anything happening yesterday, which was the 11th. There was no high impact news and medium impact news in the market. So with that in mind, with that in mind, with that in mind, we will not be trading on that Monday simply because we don't have any high impact news. And then we then look forward, which is now Tuesday, Wednesday, Thursday, and Friday. Tuesday, we have a problem. We have CPI. This was happening today at 2:30, right? We had CPI at 2:30. So we do not trade the CPI, right? We either go to trade 30 minutes after the news release or the afternoon session. Also, you must also avoid trading the day before the CPI. Okay. You must also avoid trading the day before CPI. Okay. Usually the market doesn't give you the best trading conditions. As you guys saw, obviously, what happened yesterday, the market was not really at its best behavior. All right. So if the market is not at its best behavior, you simply do not participate. You sit on the sidelines. Like today, I did not trade today, but I was watching the market very closely. Okay. So that's the first thing that you look at. And then obviously after that, what do you do? Let's switch back to our trading view. Let's switch back to trading view. Right? Okay. This is NASDAQ. The first thing that you can do is you can look at your DXY, right? The dollar index. Why are we looking at the dollar index? Why are we looking at the dollar index? Because the dollar index is one of the best indicators that you can basically use in the market, right? To predict whether the market is going up or it's going to be going down, right? Personally, the I think the XY is such a good indicator for the US dollar, what? US dollar correlated pairs. Okay, Euro USD, GBP USD, USD JPY, and stuff like that. In most cases, if you understand where the euro, if you understand where the dollar index is going, it's going to be easy for you to basically trade the other correlating or inversely correlated pairs. Okay, so I think that's the first thing that you can do, and then look at the markets from then on going forward. Okay, now after you do that, it's the same analysis again. You then come back and look at the higher time frame. The higher time frame, you're doing what? You're looking at the dollar index and checking the higher time frame. What is the higher time frame telling us on the dollar index? Let's just analyze that for a minute. Cool. So what do we have here? On the higher time frame, which is the weekly chart, you can even just switch it up. Let's go and check the monthly chart, right? The monthly chart has basically been in a consolidation, right? The monthly chart has been in a consolidation since technically a full year, because this is December 1, 2022, and the whole of last year the market has been consolidating, right? Over, I think this was when November last year, we had a market breaking down to the downside, bouncing at this block over here. We have this fair value gap right here. Show you guys that just now. We have this monthly fair value gap right here, right? The market came, tested that fair value gap, failed to get to the CE, which is the 50%, which indicates signs of bearishness, and then basically broke down, right? While it was breaking down like that, it broke down and then left another what? Fair value gap here, came, tested that fair value gap right here. So since price has tested that fair value gap, we have this bullish order block. Now what we want to see? We want to see if price is actually showing any willingness to go down and take out sell side liquidity over here and also sell side liquidity right here. This is what we're currently looking at on the dollar index. So the dollar index is showing signs of bearishness from what I see. Okay, scrolling down to the weekly chart, what the weekly chart has is we have this insufficiency here, which is this bearish order block, right? No, sorry, this bearish fair value gap. And then we have this bearish order block, which is this green one. So the market came, tested the bearish order block, which is this level. On the weekly chart, came, tested this level, and then also tested the CE of this monthly chart. Also, there's a order block. I mean, there's a fair value gap over here on the weekly. So price came, bounced at that level, and basically started going down in the opposite direction, created a swing high, broke, and then broke the swing high over here as well. Possibly this week wants to leave this fair value gap, but let's just see how the week basically goes. But from this point on, my next attention on the dollar index would then be this fair value gap over here. So when we're taking this fair value gap out, what we'll be doing also is we'll be taking the sell side liquidity that's lying over here, which is what? The previous week's low, right? There's obviously what? There's obviously a lot of liquidity here. This is a weekly chart and it's a swing low. Well, it's a swing low now, but this candlestick has not closed this yet. But there's a low over here. Since this is last week's low, this is a weekly low. There's going to be a lot of liquidity lying over here. So I want to see how price trades, breaks this level. If it breaks this level, if it goes up a bit like this now, and then shoots down, breaks this level and takes this fair value gap. I'll see what price is going to do at this fair value gap over here. And if we go through that fair value gap, I would also look at what we do at the CE of this spike right here. 50%. I know the chart is getting a bit messy, but I hope you guys are following, right? So the 50% of this week, this would be my first round liquidity would be last week's low. Second draw would be this fair value gap here on the weekly chart, and then the next one would be this one, which is the 50% of this CE, and the last one would be this one. Okay, I'm not saying price is going to shoot down and take out this fair value gap, this low, this 50%, which is this CE and this low. I'm not saying everything is going to be happening this week. However, these are the levels that I'm currently looking at for sensitivity or yeah, these are basically my targets for now. But I'm just basically going to wait and see what the market is going to do. Okay. We're basically going to be trading in line with that. And then switching down to the daily charts, I see this breaker block over here. I think price is going to come at this, which is basically going to be what? Which is most probably going to be there. This is probably going to be the high of the week, and then price continues going down to these lows on the daily chart, which happens to be a fair value gap on the lower time frame, on the higher time frame, which is the weekly, and then ultimately these levels. Okay, so on the dollar index, that's what I'm currently looking at. Okay. So this is the markets this is what I'm currently looking at. Sorry about that. This is what I'm currently looking at. So we have this little volume imbalance here, but I'll see what the price is going to do. So I'm going to be analyzing this from tomorrow and see what it's really trying to do at this point on. Okay, cool. And then let's look at what happened today during the CPI. All right. There was not that much of a movement, but as you can see, price came and did what? Take out sell side liquidity at this level, and then we had also what's relatively equal highs. Price came to take out these highs as well. Okay, price came to take out these highs as well. So sell side liquidity taken, price shoots up, takes out buy side liquidity as well. But as you can see, there was not the this was not the best price action, or this was not the best movement for the day. So we just basically wait and see what the market is really trying to do. Okay. Obviously, if you are trading the Euro USD, in most cases, they are mostly inversely correlated. They move in line, like 90%, 95% of the time, they will move in line or against the dollar index. If the dollar index is going up, Euro USD and GBP USD are going to go down. Okay. However, this is what you also want to see. This is something that you also want to see with your indices, which is your futures, which is your Nasdaq and all that. However, it doesn't always happen that way with the Nasdaq. Sometimes it moves in the same direction with the Nasdaq. You just need to know when is it going to do that and when is it not going to do that. Okay. And that all goes with your experience in the market. So we move on to Nasdaq, right? Let's start on the weekly chart. What we are seeing right now on Nasdaq over the last few, I don't know, months, maybe year, the market has constantly been pushing up, right? The market has constantly been pushing up, 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 right? Last week, you can see that the market gave us an indecisive candle. The market gave us an indecisive candle last week, which is this red candle over here, right? What I want to see is I want to see price continuously shooting up since we're on an uptrend. However, based on what's happening right now, the market, if we're in an uptrend, I want to see the market taking out highs and actually taking them out. I don't want to see it doing these shallow little runs. I will show you guys now on the lower time frame. Okay, but before we do that, since the market is still heavily bullish like this, you do not want to call this as a high and say, okay, this is going to be now the highest high of the market. You do not want to do that. Okay, you do not want to do that. You want to wait until the market actually shows you or confirms to you that it's doing what? It has created an all-time high and it wants to start moving away. And how are we basically going to confirm that? We're on the higher time frame, that is. We are going to confirm that when the market breaks this swing low. If the market shifts at this swing low, which means it's going to be breaking this order block as well. When it starts trading above here, this means, okay, market has shifted the market structure and it now wants to basically start trading the opposite direction, which is then going to need to take out sell side liquidity, which is here, here, going down. I don't have to count all the sell side liquidity levels that you guys can see. Okay, so essentially, that's what I would look for, right? And then I jump down to the daily chart. I think the daily chart is what really shows us. I want to show you guys a couple of examples, right? As the market was moving. I want you guys to check how aggressive. So price came, took out sell side liquidity over here, and then it shot up and then did what? Hit these levels and broke out. Can you see how aggressive this move is? I want to show you something else. Then it created another high. Look, when the market broke this high, the market actually broke this high and went up, right? Came back. This is a little retracement. When it was breaking this high, I want you guys to pay attention. It was really breaking this high, and then it basically went up. But I want you guys to check from here where it started giving this diagonal. I don't know if I should say diagonal accumulation, right? It's now not giving you these heavy runs to the upside. I want you guys to pay attention. I think we discussed this last week as well. Check. Check. The market breaks these highs, but it's just a shallow run and then comes back. Creates another high, and then this one. This was the first one, right? Breaks this high, just a minus bounce basically. Comes back into the range. Comes back, breaks this high, little one. Comes back into the range. Same thing on Friday. Breaks this high, comes back into the range, right? This for me is showing me that the market is oversold, or the market is now tired with the upward movement. Okay, this is a clear indication that the market is tired on the upside. The market is tired on the upside. It now wants to start reversing and doing what? Probably wants to start reversing and going to the downside. However, We are not going to be selling this market because we think it has reached its all-time high. We are going to wait for confirmations on the higher time frame where the market is clearly disrespecting these bullish arrays. What do I mean by that? We have an order block over here. What do I mean by that? We have an order block over here. If price disrespects this order block, starts trading below, we're going to see that, okay, these are bullish arrays being disrespected. We have this low over here. Price breaks this low, starts trading below. We now know that, okay, price is now showing willingness to start taking the opposite direction, which is now doing what? Attacking its sell side liquidity. Okay, so my point here is this. Every time you're trading, you always want to look at the higher time frame first. Okay, you always want to be looking at what the higher time frame is giving you. If you see what the higher time frame is giving you, then trading in line with the higher time frame and following the higher time frame is going to make things much easier. Okay, and if you want to be taking a buy position or a sell position, give me a second. Yeah, sorry about that. Now, for you to decide whether you are taking a buy position or a sell position, you always want to be taking your position either on the higher time frame or on the higher time frame PD arrays, which means if you want to be selling, you want to sell at a bearish order block on the maybe higher time frame, which is maybe the daily charts or whatever, right? Obviously, at the time of the day, specific time of the week, and all that stuff. But it's easier when you are trading on the higher time frame. If, let's say, for instance, this is now considered as a bearish order block, which is what? This last red candle before price started moving down like this. If we are now looking at that and we look at the 50% of this, sorry. If we are now looking at that and we want to look at the 50%, which is the main threshold of this, right? The main threshold of this. Now, I can clearly see that this is the main threshold of this last red candle on the higher time frame, which is the daily chart. However, if I then go down on the lower time frame at specific times, I want to then start seeing specific reactions because I'm at a specific bearish arrays on the higher time frame. Okay, but you also need to be very careful when you are trading against the overall trend. Since this is a heavy bull market, you do not want to be going in here and making heavy selling. The reason why you don't want to be making heavy selling is because we have not fully confirmed on the higher time frame that the market is now starting to break in market structure and starting to basically trade to the downside. Okay, that's what I would basically look at. Now, coming back to today's session, what is happening today? If you guys notice something also before I get into that, if you guys notice something, we are now trading at what? UCT4. So it has changed. It's, I don't know, I think it's approaching winter this side, but summer in the US. And when that happens, we change from UCT5 to UCT4. So we are currently trading at UCT4, which means the market no longer opens at 3:30. Okay, the market now opens at 2:30, right? Guys really need not to be confused here with those times. Okay, if you're on UCT4, the market opens at 2:30. If you're at UCT5, the market is then going to open at 3:30. Okay, however, it's always obviously simple if you are using the time zone in New York, as I always say to you guys. Always use that. It's just going to simplify your life, basically. Okay, now going back to the market that I did not trade today. I looked at this thing. There was no clear bias. That was my problem with today's trade. There was no clear higher time frame bias where I'm going to say and easily say that I want to see price doing this and I want to see price doing that. That was my major problem with today's price action. That's why I did not trade, because it was not the easiest market to trade. Okay, so we are really in a consolidating market at the high time frame, based on this, based on this weird little movement that's currently happening. Okay, based on this, based on this little movement. I don't know, is it a bearish flag or whatever it is, but we're on it. We're on a what? A little consolidation. That's why it has not been the easiest price action to trade. Okay, and then after everything that I've shown you guys, you can go down to the lower time frame. I wanted to see price reacting at this fair value gap on the low on the H4, and I basically wanted to see what price is going to do. However, I'll show you guys now, right? I'll show you guys now. Keep in mind what this. Let's see. What's an interesting color you guys will remember? Keep in mind what this thing is doing. Nah? This is an H4. This is the 4-hour chart fair value gap. Okay, I want you guys to pay attention to this specific level. I wanted price to reach at those levels, but that's when I was basically going to look for selling positions. However, what I didn't like is the time that we reached that level and how we didn't really see a nice retracement or displacement or whatever when price got to those levels. Now, let's go down. Let's move over to the 15 minutes chart. On the 15 minutes, we just have this bearish order block and this buy side liquidity over here. So let's move down to the 5 minutes chart and the lower time frame. Let me just move straight to the 1 minute chart. Okay. 1 minute chart says what? 8:30. This was 8:30. So when you see price, this candlestick over here, I'll show you just now. This candlestick over here says 8:30. It says 8:30 here because this is South African time that I was telling you guys about. However, at 8:30, this was when the market opened, and this is when the CPI basically happened. So during the CPI, what did price do? Right? It shot down and took out sell side liquidity. I know it took out sell side liquidity over. Let me see. Let me see. Okay, it was essentially just sell side liquidity at these levels, and then later on, I think this was 9:30. Yes, around 9:48, price came and took out what? Sell side liquidity at these levels. Okay, taking the 8:30 low plus the sell side liquidity over here, right? My official draw was that I wanted to see price come up here. However, I really wanted to sell it more than buy it today. So I did not participate in this movement when price was basically going up, right? So 8:30, obviously you're not doing anything here till around 9, right? This was 9 o'clock over here because you don't want to be trading for like 30 minutes after the CPI news release. So 9 o'clock is over here, which is 30 minutes after, but there was nothing happening. So after 9 o'clock, usually if the market is not really giving you any nice and clear setups, what you then want to do is wait for 9:30 because 9:30 is usually going to give you a stop hunt. Okay, our 9:30 was over here, so it just gives you this minus stop hunt and then basically start moving the opposite direction. Targeting what? Sell side liquidity over here and this sell side liquidity over here, this orange line that we drew earlier. Okay, cool. Now, price started basically moving up and up, and as you can see, guys, it didn't really give you the best, because if I would say now, I wanted to see a market structure shift. This is the swing high that we had, right? This is the little swing high that we had. I wanted to see a displacement at these highs and basically start seeing the market moving up. But I was not really happy with the price action over here. And when it broke this swing high, shot up, this was around 10.15. I was also not happy with this. But ultimately, it went up to take out buy side liquidity. And when price got to the levels that I was anticipating, which was this fair value gap on the H4, right? I want you guys to notice something. It got here around what time? Around 11. Already at 11, I'm looking to trade, right? So the market just got here at 11 and basically start going the opposite direction. However, if this happened during my kill zone, right? If this happened during my kill zone, we have this H4, fair value gap over here, which is this orange part. And then at specific times, maybe this is my kill zone and price comes down and breaks market structure, which is over here. If price then breaks market structure over here with this swing low and leaves for me, this little fair value gap. And this is an if kind of a discussion, right? If this had happened, if exactly had happened in my specific kill zone, then this was going to be my sell entry, targeting what? Targeting either this sell side liquidity over here and these inefficiencies down here, since these are bullish arrays at premium, at discount levels rather. So this is basically what I would be looking at. Okay. This is basically what I'd be looking at. However, the market did not really want to give me something that I would find worth trading today. So these are the type of days where you basically stay out. This is not the worst price action. This is actually good price action. If price had given me a setup over here to go take out buy side liquidity over here and also take out or also test rather this C over here, I would have traded that. However, it didn't give me a nice setup that I really liked, so I just missed the trade. I didn't really want to push it and trade when the market is really not giving me something that I think is worth trading. Okay, so that's the reason why I did not trade today's market. Okay, so it's not always that the market is going to give you. It's not always that the market is going to give you nice and clean setups, but when it does, you capitalize. If it doesn't, you just simply stay the fuck out. That's just what I think. And this is just one of the days where it doesn't really give you the best setup. However, watching the market when it does that, being in the charts when it does that, teaches you a lot also. Okay, it also teaches you a lot. And yeah, I don't know if you guys have any questions so far before we wrap up today's session. But this is essentially what I think was my highlight for the day. Okay, this was my highlight for the day. So I'd be looking to trade again tomorrow because, again, as I shared with you guys earlier when the session started,